Once traders got to know the key policy decisions of the Federal Open Market Committee, they are shifting focus back towards the economic calendar, which reminds them about crucial data on the US and global economy. Let's watch a video calendar on InstaForex TV channel to find out the details. Importantly, employment is the key criterion for the Fed's policymakers to make their assessment of U.S. economic conditions and judge whether the economy is ready for tighter monetary policy. So investors closely monitor weekly updates on jobless claims. However, this Thursday on July 29th, trading sentiment on the US dollar will depend on other meaningful economic indicators. Market participants are alert to the flash estimate of the U.S. gross domestic product for the second quarter. The U.S. economy is expected to expand 8.5%. That is a considerable increase, even allowing for the low base effect. The U.S. national economic output is growing mainly on account of capital investments, inventory investments, and a rise in imports. It goes without saying that the economic recovery is going on at a brisk pace, even despite inflationary pressure. Let me remind you that consumer inflation in the US has been soaring at near 5.4% in annual terms, more than twice higher than the Fed's target level. Unlike the US, consumer prices are holding at acceptable levels in the countries of the Euro bloc. Flash estimates by the Eurostat experts, which are due this Friday, can prove this statement. Analysts foresee an uptick to 2% in the CPI for the euro area in July from a year ago. Back in July of 2020, the CPI was measured at 0.4%. Thus, the ECB tolerates the current inflation acceleration, defining it as a transitory happening. Besides, preliminary data for the EU GDP is on investors' radars on Friday. Traders will cheer the signs that the EU economy is gaining momentum. It is expected to increase to 13.2% in the second quarter from minus 1.3% on a yearly basis. Bearing in mind the low base effect, investors will give priority to a quarterly change. The consensus is rather optimistic. The EU economic output is likely to have expanded 1.5% on quarter, following 2 quarters of economic contraction. Recently, the European Commission revised its forecasts of EU economic growth. The policymakers suppose that the GDP will recover to the pre-pandemic levels in the final quarter of 2021. The data, which will be posted on Friday, could confirm the accuracy of the forecast. If the prediction comes true, the euro will receive a boost, so traders will have an excuse to buy the euro-dollar pair. On Friday evening, the dollar bulls will be encouraged by upbeat personal spending data from the US. Notably, consumer activity accounts for almost 2/3 of the US GDP, so this indicator is of major importance. Eventually, experts project a 0.7% increase in consumer spending in June. In the report for the last month, the actual print did not meet expectations of growth and logged a zero change. In case the actual score confirms the flash estimate for June, dollar-denominated assets will rise in value. And you have watched Financial Calendar on Insta TV with me, Anna Kasatkina. Subscribe to our YouTube channel and we'll see you back soon. Bye!